Hey guys, thanks for tuning in to flippinghouston.com. I'm here today with Mr. Michael Plaks. He's the tax accountant. So, Mike, how long have you been working with investors?
Since this morning.
Since this morning. On a serious note.
I'm in private practice for almost 20 years
Oh,
now,
wow.
and half of the time is with investors. Right now,
Okay.
pretty much all of my clients are in real estate.
Okay, so you know a lot how they work and everything.
No.
How they work. No. At least you know about their taxes. That's all that matters. So what is the IRS's definition of a real estate investor?
I'm glad you asked because there is no definition.
Oh.
I have my own definition. My own definition for a real estate investor is somebody who owns real property at some point, buys and sells,
Okay.
which is different from anything else where you make money in occupations related to real estate. For example, realtor makes money from real estate, but nobody will call realtor an investor.
Right.
On the other hand, when we talk to each other, let's take as an example something very common, wholesaler. Wholesaler happens to be somebody who doesn't own the property.
Right.
During the transaction, he owns the right to buy property but never owns property itself. So technically speaking, wholesaler will not be classified as an investor. And tax rule applicable to wholesaler are more similar to those of realtor than to a true investor. Investor will be, again, somebody who had property and then eventually got rid of that. There are two ways, however, and that's the most confusing part for any investor dealing with the IRS, is that the IRS doesn't understand the word investor. There is no such thing. We can have people who buy properties to hold or people who buy properties to sell. So the IRS understands reselling business, which would be similar to reselling anything. Does not have to be reselling real property. In our case, it's real property. But it could be reselling used cars or reselling something on eBay. Somebody who sells stuff on eBay actually follows the same tax rules that somebody who buys and sells real estate. So that's one type of business. Second, if you buy and hold rentals, that's a different type of business. So when we say investors, that's somebody who owns property in one of the two capacities. Either as a landlord, somebody who generates money from monthly cash flow and waits for appreciation of the property eventually. Or somebody who is buying property, trying to fix it and get rid of that as soon as possible at the highest price. That's yes, flipping, rehabbing, both kind of go in that category, but really not wholesaling.
What type of entity would you recommend for a newbie investor?
None.
None?
And that's, I guess, the second most frequent question I'm being asked. What kind of entity? The first one is, where do I get the money? And as far as entity, here is my response to that. There are different reasons to create entities. And most frequently we talk about asset protection, legal liability protection. That's the attorney's department, not really mine. That's one reason to consider having an entity. Then to save on taxes, that's second reason. And we can have a couple more, such as involving partners and some other stuff. So if we take complexity out, if you are not doing it with partners who are not your spouse, like true outside partners, that may bring complications. So short of that, if it's just you and your spouse trying to do some deals together, there are two reasons we're saying saving on taxes or legal protection. If you are having rentals, you really cannot save on taxes by entity. In fact, you may even increase it slightly, but never reduce if you own rentals. If you are in the flipping business, you may be able to save a little bit on taxes, but to do that you have to have volume. You need to be doing a lot of stuff, and I have to give you some rule of thumb. Rule of thumb will be, if you put in the end of the year in your pocket 50,000, and that's rule of thumb. Don't argue with me about 50, okay. It can be 25 or 75, but
for the sake
if you are in that area, and when I'm talking 50, it's not 50 on a deal. It's 50 after everything.
Right.
After you paid all your expenses, after you paid for driving, for attorneys, for your computer, your advertising, everything taken out, and you still have 50. Maybe at that point we are talking about creating some kind of corporation to save on taxes. But your question was beginning investor. Beginning investor is not putting 50,000 in his pocket right away,
Right.
because there is a lot of cost to get business rolling, and some people hit it pretty quick. For some it takes more time. But unless you are confident that in 2010 that we are in right now, you are going to make 50 after all expenses, you're not going to save on taxes. That leaves asset protection. Asset protection, as I said, I'm an accountant, not an attorney.
Right.
Attorneys recommend for your own liability legal protection to put things in LLCs, for instance. That's absolutely fine with us accountants. That's a good idea. But that accomplishes one thing, legal protection. Does nothing to reducing your taxes, which is, I guess, frequent misunderstanding. New people, when they ask me, they assume that by creating some form of business, they can save on taxes.
Write-offs.
Yes, write-offs or something. And write-offs is the biggest, I guess, issue there, because they say, what kind of company I need to create so I can write off my expenses? None, because when you have business expenses, you can write them off with or without company. You are not required to have anything. Just do business, incur legitimate business expenses, then you can write them off. Company may let you write it off in a different way, which may save taxes when you have substantial flipping business, and never really when you have rental business. So that's why I'm saying is when you start on my side, entity is not necessary. On the legal side, for an attorney, different conversation. If you create, let me say this, you can create an LLC, for example, put your rental property in an LLC. That really does no harm to taxes, no change to taxes. So if you need it for protection purposes, absolutely do it. But paying $5,000 to some out-of-town promoter who is trying to put you in a multi-layer structure, saying that it is bulletproof for any kind of legal attacks on you and it saves you thousands on taxes. The only thing it's doing is you're 5,000 less wealthy in your business.
Well, without an entity, can you still deduct your gas mileage,
Yes.
your phone calls, and all
Yes.
that? Okay.
Almost without exception, every business expense that you incur, you can deduct without forming any kind of company. You just need to engage in business, make some money, do some deals, incur expenses, and record them.
Okay.
And speaking of that, I'll plug my website here for a second.
Oh, that's it.
It's okay, there is my website, which is my name, www.michaelplaks.com. Reason I'm mentioning that, there are articles there specifically elaborating on the questions we just talked about.
Okay, good. Check
There
it
is-
out, guys.
Okay, and it's michaelplaks.com, michaelplaks.com, and I'm sure we would have a link on your
Yeah,
website,
absolutely. We're
right?
going to put a link.
So basically, when you go there, you can find articles talking about entities. There is an article that elaborates on my view on that. There are articles about different type of taxes for real estate. So